we welcome you here in discussion panel. Let's start. Chris, you.
Yeah, I'll start. So Chris Aruliah, pleased to be here. I head up business development at Bitstamp. I've been at Bitstamp a couple of years now. And prior to that, I was with a company called Token. So I've been on the crypto journey probably for the last 5 years or so. And really, like I said, happy to be here.
Okay, Quentin. Great.
Hi, this is Quentin from Okex. I lead the, yeah, can you hear me? Yeah, I lead the,
yes, yes.
I lead the business development of Okex for Europe and US.
Okay, Teana.
I am Teana Baker-Taylor. I am the UK General Manager for Crypto.com. I lead our UK market strategy, operations and regulatory affairs. I have previously worked for Binance. I used to lead a global regulatory advocacy organization called Global Digital Finance. And I've been in the crypto space for about 5 years now.
Okay, great. Thank you, Maximilian.
Yeah, nice to meet everyone. My name is Maximilian. I'm the head of banking and payments, amongst other things, at Kraken Exchange. Been with Kraken for 3 years and a few months now. And before that, I used to work in banking in the Netherlands. I'm excited to be here.
Thanks.
Hi, my name is Kellogg.
Hi.
Yeah. Hi, my name is Kellogg Fairbank, and I'm from Nash. Incredibly excited to be here. I have been in fintech for more than a decade. I know I look young, but I am actually a little bit older than than you might think. I'm just joking, by the way. And so I've been in fintech. I've worked for companies such as PayPal, Braintree, and Venmo, and now Nash for the past year.
Great. So our moderator is here. We are really happy to see you here, James. So I'm giving you the floor. Please feel free to ask any questions that you have.
Thanks very much. Sorry, I was a bit late to the call. I had timed it to get here at 22, but I think we're a bit ahead of schedule, so apologies for that. Personally, I'm very excited to be moderating this panel today. As background, I'm co-founder of a DeFi protocol called MStable. We unify pegged assets and try and optimize them for our users in terms of efficient trading between same peg assets, as well as creating meta stable coins with that are kind of have the best risk return profile possible in terms of the native yield they receive, but also some security mechanisms built in. I'm kind of an outlier here. I think everyone on the panel is from top tier centralized exchanges. So I'm really interested in kind of discussing with the panel today some questions related to CeFi, the kinds of offerings that CeFi has that DeFi doesn't have, and kind of digging into the relationship between these two ecosystems.
James, I'm just going to correct you. I'm just going to correct you very quickly. This is Kellogg from Nash. Everyone is centralized here except for Nash. We are decentralized.
We also have a decentralized platform too, so a little more balanced than maybe we initially thought.
Same for us. We have a decentralized one as well. Well, so it seems like there's kind of it's not quite either or. There seems to be kind of offerings on both sides. Perhaps we could start there then. Kellogg, could you kind of just explain your offering and how it kind of relates to DeFi?
Sure, absolutely. So I think Nash has been around since the idea first came around in 2017, and in 2018 we had the first security token offering in Europe. We raised 20 million in the STO and then 10 million from leading blockchain VCs. I think, and where I'm getting at is that we were founded on the principle of being a decentralized exchange, non-custodial, and we've noticed that we've seen over the past 2 years of building and putting our exchange out onto the market, we haven't really seen the engagement that we were looking for, and so we've really transitioned into more of a so-called crypto first bank, if you will, right? So what we see is we're a non-custodial wallet, if you will, but we allow for we bridge the gap between crypto and your local currency. So essentially, our crypto cash exchange service combines low fees with instant delivery to a very secure, safe wallet.
Thank you. And Crypto.com, I know you have a kind of an AMM implementation as well. Interested in understanding your decentralized offerings.
Yeah, so Diana was on before me, so I don't want to necessarily kind of rehash the whole thing, but Crypto.com has a platform or an entire suite of services. One of those is a DeFi platform, which enables a number of financial service offerings within that, which kind of complements the app that we have, the exchange, our card, and a number of other kind of financial services around earning yield, etc. So we are really an ecosystem builder, and we're focused on putting in place the access for people to join crypto asset participation in a variety of different ways. I think we've seen a lot of interest in DeFi over the last year, especially in the last 6 months, and I think that's really driven by one, some experimentation for sure, and two, the ability to kind of create new market pools, new liquidity pools that kind of react differently than your traditional order book environment. Things like reduced slippage, etc. I think are driving some of the trading activity that we're seeing in the DeFi space, especially in our environments.
Great. And finally, I would love to hear from Okex. I understand that there's a move to create Okechain. Would be interested to kind of hear about how Okex is positioning itself in the DeFi ecosystem.
Yeah, sure. So the strength of Okex is really lies in its derivative platform, where we have a very strong retail, institutional participation. And I think, the question of centralized exchange versus centralized, it makes sense if you consider especially derivatives, where you need to have like a very strong risk management framework and technique that are difficult to implement on decentralized. On decentralized exchange, what it's great, it's for innovation. It's to be able to launch lots of new projects and to iterate quickly. And it's very interesting as a first step for like new protocols to list and to build their community. And that's why we want to do as well. We want to attract new projects on our Okechain, so they can build up quickly and try their UX, try their user engagement. And hopefully there will be a bridge as well to our centralized platform later on.
Thank you. I might move on to Maximilian at Kraken. You guys obviously were one of the first Bitcoin exchanges, and I'm interested in kind of understanding how you see a CeFi being positioning itself in this kind of DeFi environment. I might be kind of a biased participant, given that I work in DeFi, but I'm interested in understanding what Kraken and centralized exchanges can offer that DeFi can't.
Yeah, there are several aspects to it. First of all, I think we can all agree here that there is an increasing interest in DeFi products from various types of customers, right? The traditional financial markets cannot, offer what they used to offer to investors, so they look for alternatives. And we at Kraken, we definitely see that as well. That's why we are starting to list more and more of these DeFi assets on our exchange so that people can, you know, at the very least get some sort of a staking return primarily. Right? We definitely see that as arguably one of the biggest trends of this year. When you ask me now about pros and cons of centralized versus decentralized exchanges, that would probably go beyond the 40 minutes that we have here. But I think, from my perspective, there's room for both in the market. Depends on your preference as an investor, depends on a product, depends what you look for. Of course, a centralized exchange has certain advantages of being able to offer high liquidity, access to various fiat currencies, etc., etc. But again, this depends heavily, from my point of view, on what you, as an investor, as a customer, look for. Right? So there is no right or wrong answer from my point of view.
One thing that I think centralized exchanges have a real edge on is dealing with institutional players. I don't think that a large institutional player or companies like Tesla, for example, I don't think they bought their Bitcoin on Uniswap. I don't think they bought wrapped Bitcoin on Uniswap. So interested in hearing from Chris and Maximilian and Quentin, perhaps on kind of institutional purchases of Bitcoin and Ethereum and perhaps other DeFi assets, and how you guys are positioning yourselves on that front, with particular kind of reference to whether we've seen an uptick in institutional interest in 2021.
Yeah, I can add something there. It's what I mentioned earlier. I think to understand the difference, it's you have to consider, first of all, derivative versus spot. Currently, it's pretty hard to true derivatives on DeFi, even though there is a couple of interesting protocols that are trying to build a perpetual swap, for example, or even options. But to have a good in the derivative market, you need to have like market makers. You need to have a lot of institutional players. Spot, on the other hand, a lot more can be done on DeFi, and you can have this interesting like innovation that was done on the automated market maker, the AMM. It works pretty well to get liquidity, and actually institutions as well are starting to be more active on DeFi projects, for example, such as Aave. So I think the boundaries is a bit more different now. But again, spot versus derivative is an interesting framework to consider the differences, I believe.
Yeah, and I think just to add to what Maximilian said as well, and to answer the question on institutional, James, certainly what we're seeing right now in terms of the rally, at least the uptick in the volumes, is mainly driven by corporates. The level of retail demand has also increased, but certainly not to the levels of 2017, and it's certainly being driven now by corporates. And the reality is that corporates look for a certain makeup of institution that they can trade with, and they require that from a counterparty risk perspective. So, regulated liquidity, etc. But that's the perspective from the corporates. You mentioned the likes of Tesla and MicroStrategy. Those orders are coming into the market, through regulated venues, but also being split across those regulated venues given the size. And that size of order, that we're all seeing has increased massively. Obviously, it's public in terms of the purchases from those companies. I do agree with Maximilian on the point of CeFi versus DeFi. One of the things I think the great thing with our market right now is the tremendous amount of innovation that we're seeing. And in the DeFi space, that innovation can advance at pace. And I do think it's a combination of both that really is the exciting part for us, where essentially what you're seeing happening is the development of a parallel financial system, with the option for different participants to go down different paths, or even to go to vendors that could offer both. So it's just a great time, I think, that we're seeing in our space right now.
Yeah, thanks, Chris. I mean, definitely agree with you with what you said. Also, we see on our end, an increase of interest from institutional customers And it can be everything, right? It can be family office, can be hedge funds, can be money transmitters, can be investment banks or smaller private banks. We see a wide interest, an increasing interest in this space, in this new asset class, and both on the spot side, but also especially on the future side at Kraken. It's going very well.
Yeah, and I think as well to add to that, and also to what Quentin said, the option of spot and derivatives, as we see, obviously in the crypto space, we see a number of derivatives players and venues, but we're also now seeing institutions come in, right? So Goldman trading crypto derivatives now, and we're certainly seeing when we talk to institutions that there is the question around spot and futures and options. So this we see as an area of the market that will grow tremendously, particularly as traditional institutions come into the space.
James, can I just add to that around the infrastructure piece? So I think one of the main differences that we're seeing at the moment between CeFi and DeFi is we're in the DeFi space, kind of where we were potentially 3 years ago in the CeFi space, that there is interest, which is clear, and the infrastructure might not be completely ready in the DeFi space. And, it's absolutely not. We're still in the test and learn and evolution stage where we're experimenting. So one of the things that, we have done recently is launch a fund, so Crypto.com Capital, which will help to incubate and provide funding for projects that are looking to build on our mainnet, Crypto.com chain, but really to help the ecosystem build those products and companies that provide ancillary services in the DeFi space that potentially can provide more robustness to the infrastructure. So I think we'll start to see more of those interested parties at the institutional level get involved in DeFi once some of the infrastructure challenges are resolved. I think the other thing that's potentially holding some of those institutions back, whether it be family offices or hedge funds, et cetera, is we still have some smart contract issues. And so, until those are resolved and, there's a more certain way of kind of validating that smart contract has been road tested, we're going to continue to see, some snafus in the DeFi space that I think would be less, would reduces the risk appetite, I think, for an institution to get involved as deeply as they might want to today.
Yeah, I think I'd be interested to kind of touch on the way that CeFi is relating to DeFi and how that could potentially change. So right now it seems like they're two pretty distinct ecosystems, even though there's obviously the players on this call have kind of pretty significant interests in both. Is there a world where CeFi is a compliant front end to DeFi? Is that a world that the CeFi players on this call are potentially envisaging?
Well, I think the compliance.
What you said. Sorry. Go ahead, Teana.
Sorry. From the compliance standpoint, I think you raise an interesting point. So we, again, DeFi being new, we're in the middle of, getting more clarity from the CeFi perspective, from a regulatory perspective, right? And so now we're seeing a lot of questions from regulators and standard setters globally around how they should be thinking about or potentially addressing any consumer risks as related to DeFi. Today, DeFi, one of the benefits and the attractiveness of it is that anyone, anywhere can participate at any time, right? It's completely decentralized, where in the centralized space, most of us are operating in jurisdictions that require us to do a significant amount of KYC, which doesn't today apply in this DeFi space. But certainly for players like Crypto.com, who have a cross section of business in a number of different areas and platforms, that becomes a concern when you're looking at your business risk overall. So I don't know if there's going to be a way to kind of put a front end onto DeFi, and whether or not that's something that is helpful or harmful when looking at DeFi from a centralized perspective. I'd really like to hear Chris's view on this one, actually.
Yeah, I think on this one, it's an interesting one, really, because we face, from a centralized perspective, we do face that challenge of, if we're connecting to a counterparty, what does that regulatory framework look like? My personal feeling is that what might happen is that aspects of DeFi could get absorbed into the CeFi space, or there could be partnership elements that emerge. Whether it becomes a front end necessarily, don't know, but from a CeFi perspective, certainly we look at what's happening in DeFi and the innovation that's happening there, and the big question we have is, how can we participate and how can we utilize? So if we can find models that allow us to do that, if it is a front end onto it, so be it. I suspect that regulatory wise that's not possible, but certainly we'd look to see what options are open. But definitely it's some kind of ability to absorb that innovation.
Yeah, thanks. That's really, really interesting. Would be interested to hear from the panel more more views on the regulatory direction of crypto in 2021. We've had such success in the past 12 months, but I think with success comes more regulatory oversight, and that's not necessarily a bad thing. So interested in just where the panel thinks major regulators around the world, potentially specifically the EU for Bitstamp and the US for Kraken, where the direction is going.
Yeah, I mean, maybe I'll kick off. As we see happening, regulators around the world are more and more interested in this space, and rightly so. And we welcome regulation. Regulation is something that is good for the market. We will see more of it. Obviously, in Europe, we've got the MiCA regulation coming, which is equivalent to MiFID, essentially. And all of us that participate in Europe will have to prepare for that. We already are subject to anti-money laundering regulation via the VASP regulations in Europe, so Virtual Asset Service Provider. And so certainly regulators are going to add more to us. It's welcome. Particularly, I think the next step is consumer protection areas. And as the market grows, and the size we're at now, there is obviously going to be more regulation coming in, which I think all of us accept is welcome.
Yeah, no, I totally agree, Chris. I couldn't agree more with you, in fact, with what you just said. If you look at the history at Kraken, we always have been, the forefront of regulation, and I also agree that it's important. It gives confidence into the market. It generates more trust. It generates more oversight, and it leads to wiping out all the bad players in the market, which I think we all agree here is good for all of us. We definitely see also that there is an increased interest of regulators in various countries across the world, not only Europe and the US, but across the world in other countries that are getting into the space, that are thinking about it. And, I think the days of the wild west of crypto are a little bit gone now. Some people might be sad about it, others not. And I think that this is definitely something that will continue in the future. Right? I mean, we at Kraken, last year we got our SPDI license in Wyoming, for instance. We got our futures MTF license in the UK, and this is something that we will continue. Right? Regulation is not something bad; it can be something very good. However, a little addendum here: I think it needs to make sense. Right? Regulation just for the sake of regulating something, I think is not the right thing to do. But if there are regulators out there, which there are, they think about it and really want to construct a good, fair framework for all, let's call white collar or good participants, then that's absolutely something we support everywhere.
I have to agree with that as well. I mean, Nash has worked with regulators since 2017, right from the start, and continue to do so. And we are fully compliant here in Europe, and believe that it helps to legitimize digital assets, right? And I think that bringing that clarity, is good for the industry.
I think from a regulatory perspective, MiCA is going to be very powerful in that it will be one of the first regulatory regimes that covers multiple countries, right? So if we're looking at all of the EU member states ascribing to a similar regime, that starts to level the playing field for all of the players in Europe and people transacting in and out of Europe. And I think there's a little bit more alignment with other jurisdictions across jurisdiction, which has been a challenge. One of the things that, from a global perspective, regulators originally had a strong concern around AML, and we've seen that addressed, at least in theory, by the FATF recommendations and the rollout of AML regimes to most of those member countries. What regulators are looking at now, I think we're kind of getting into the nitty-gritty of more complex issues like how are unhosted wallets going to be addressed, previously off the table, now coming back into discussion, things like DeFi. And one of the key things, I think, as we start to mature in the market, regulators are looking at market integrity. So things like market manipulation and front running, et cetera. Whilst we've got kind of the big issues out of the way and we're starting to see some more collaboration across jurisdiction, which will make global participants like Crypto.com and everyone else on this panel breathe a sigh of relief that we're kind of getting some framework in place so we understand the rules of the road. I think regulators are now more experienced, more educated, and they're going to start going deeper into actually how we operate. I would expect that to come.
Thanks for those answers. It's obviously an evolving landscape, and I'm interested to talk about kind of touching on regulation, but also stablecoins. So obviously, stablecoins are kind of my bread and butter. Interested to touch on USDT. A lot of particularly non-crypto people I've noticed are really concerned about USDT and the kind of risk that a failure in USDT could pose to the Bitcoin markets. Most DeFi and other crypto native participants, in my view, seem less concerned about it. There's a recent ruling in New York that kind of bolstered the legitimacy of Tether even further. Interested in your view on USDT and how that asset could pose potential risks to the crypto markets.
Maybe I'll jump in on this one. Yeah, I mean, I think USDT is a tough one because depending on which side you're on, traditional finance does look on it with a lot of scrutiny and a lot of questions. It also, because of that, makes it harder. We don't list USDT, and there are reasons for that from a regulatory perspective. But it does form a part of the market, an important part of the market, and on one side, in terms of the on and off ramp into certain exchanges, it is quite important. So I think the questions around it, it's good that they're resolved, whatever route that's through. And obviously, you mentioned the New York ruling. I think clarity for all in the market is a good thing. And obviously, that's something we would encourage.
What's the kind of long-term outlook for stablecoins in your view? Is USDT going to be around in 15 years, or is there going to be a different kind of model? Will it be a regulated variety, more regulated variety like USDC, or will central bank digital currencies come about? How do you see kind of the future panning out in terms of stablecoins?
I think looking 50 years out might be a bit tough, if I might just sort of respond quickly. But if we look to the immediate future, I think the recent Citi report's quite interesting. There's a chart in that where they describe 3 different networks. You've kind of got the CBDC network, you've got the crypto network, you've got the stablecoin network, and they all interact. So I definitely think there's a lot of potential for stablecoins in providing a new network option, many other options beyond USDT, and good options as well. So yes, stablecoins certainly will be a big part of our ecosystem in the future, and quite a few coins participating in that.
I mean, I would have to agree. I think stablecoins, if you look at from 2020 on, we've had 500% growth in the number of stable coins, right? So I think a euro stable coin to rival USDC would be welcome. And I also think maybe potentially DM, which is also formerly known as Libra, could make waves and be as popular as Tether and USDC, and possibly take over in that front. And on the CBDC side, I think if you look at the Chinese, the digital yuan, I think that's also something that's super interesting. So I see stable coins, gaining speed and here for the long run, and something definitely that we are looking at for the Nash platform.
Yeah, and I think if we look at Tether and its inception and evolution, what problem was it trying to solve? And I think one of the key things that it addressed early on was the lack of safe, secure, and available fiat on and off-ramp access to the exchange environment, right? So several years on, most of that access has been resolved for most exchanges. And that also comes from the regulatory clarity piece, right, around working with payment service providers to provide users with access in and out, through fiat. So then, what is the evolution of the stable coin in general? And we still see, a huge appetite for a stable coin as an underlying asset, for example, for a futures contract, again, going back to institutionals, for somebody who may not necessarily want to hold the BTC asset, but they feel more comfortable in the stablecoin space, for example. We're also starting to see, different authorities anoint, or maybe that's not quite the right word, but authorize the use of stablecoins, most notably in the US, and allow banks to take custody and hold custody of those. So I think that stablecoins still provide a really important tool. Who the winner is going to be, and is it a one-horse race? I don't think so, but it would be impossible to predict today.
Yeah, I totally agree with that. I mean, especially looking at 15 years now, it's like 90 years in normal life, right? 15 years in crypto is 90 years in normal, or even more. It's impossible to really say. I mean, what I'm convinced of is that stablecoins are currently and will, for the foreseeable future, continue to be an important part of the ecosystem. Absolutely. Whether or not you're gonna need 600 different US dollar-backed stablecoins, probably not. So it's not going to be a marathon with thousands of participants, but probably you're going to have more than one asset, right? So it's going to be a multiple horse race from my point of view, and they're going to continue to be an important part of the ecosystem.
And I think just really quickly, it's important to interject here that especially in Europe, we're seeing a lot of attention placed by regulators on stablecoins. Most notably, we had Lagarde making a number of statements around stablecoins, and the interest by the European Commission to take a deep look into their structures, how they're being used, and any risk around them. So that's evolving.
Yeah, the stablecoins have become an essential part of the derivative already, where it's used for settlement, it's used for people to take their P&L, and that's here to stay. Right now, it's mostly USD, but I agree with the rest of the panel that there's probably room for at least maybe 2 more or 3 more like stablecoin. But that's already like more than 50%, I believe, of the derivatives are settling in stablecoin. So we can even believe that it's going to increase compared to derivatives that are directly in ETH or BTC.
Another theme I want to touch on in 2021 is derivatives and option markets. These are kind of increasingly important markets in crypto. And the vast majority of volume is on centralized exchanges, and there's kind of a growing interest in DeFi, particularly with layer 2. Perhaps we can start with Okex, given your huge BTC futures markets. Interested in kind of understanding just broadly the direction of derivatives and option markets in your view.
Yeah, it's definitely is growing quite fast, and I think. The interesting part is that it's still you still require, as I said earlier, like a centralized exchange to offer like the best infrastructure basically for derivatives to grow. Not only because of risk management, where you need to have like some, for example, price limits. You need to have like a proper liquidation mechanism. You need to have a price discovery as well. And I think it's back to what we said during this conversation. People have to realize that there is a strong connection between CeFi and DeFi regarding price discovery, where the price discovery of the underlying spot market happen on CeFi, and it's basically it's brought to DeFi through arbitrage. Basically, that's why you get like a proper pricing on DeFi, because you have arbitrager trading back and forth, and plus you have the Oracle, and the Oracle are probably the weakest link right now of DeFi, but it's being addressed. So derivatives, in that sense, are going to be a bit more difficult, I think, to grow on decentralized exchange. But there are, again, as I said, there are like interesting projects, but they need probably to come up with some of the same mechanism that have been successful on centralized exchange in crypto and in the traditional assets.
To what extent is Bitcoin's success? And if we define Bitcoin's success as actually reaching some kind of price stability, because people value it as a store of value, might kind of settle at say 200,000 a Bitcoin, let's hope, and then stop being volatile. To what extent does that kind of actually destroy interest in derivative markets? I know that most people are actually interested in these products because of their volatility. So is there a conflict between the current kind of use cases of Bitcoin, which really enjoys its volatility, and its kind of narrative as being this store of value?
Well, I think your question, James, is then focused on, just Bitcoin. So CME's just launched an ETH futures contract. They've seen quite a lot of interest in that. So I think that as, additional assets in the ecosystem, find their feet and their value, the derivatives market will expand to include, other contract pairings that are maybe exclusive of BTC. So I don't necessarily think that's the only asset that's going to play in this derivatives market.
Yeah, I think that's very fair. We have 5 minutes to go. The kind of last theme that I wanted to touch on is network congestion on Ethereum and the kind of extreme gas prices on there, and whether we see a kind of multi-chain world emerging in 2021. A lot of projects have been positioning themselves for this. Solana, Binance Smart Chain, Polkadot. Is this kind of just a hype cycle, a hype cycle kind of thing that'll disappear, or is this kind of an emerging multi-chain world that we're seeing, driven by huge transaction costs?
Maybe I'll jump in. I mean, I think we will see the emergence of a multi-chain world. At the moment, transaction costs do drive it, but I think there are other elements that drive it. So maybe the short-term transaction costs, but some of the newer chains have quite a lot of attractions to them, and as developers, build out more on those chains, we certainly see a multi-chain world emerging.
Yeah, absolutely. I mean, you cannot say things to 100% guarantee in our industry, so I'm going to be a little bit careful on doing that now here, right? But I mean, I wouldn't call it a hype cycle for sure. We see the growing interest in certain, newer projects, and from my perspective, these are going to stay, right? I mean, Ethereum is not going to disappear by no means, of course, but we do see a growing interest in such an establishment already of projects that were unknown 1 or 2 years ago, that I mean, I wouldn't bet on them disappearing anytime soon.
And I think if you only have to look at the market to see how many market players are operating in that layer 2 space, specifically to address this problem, congestion fees, etc., and interoperability, right? So again, going back to, one horse doesn't necessarily win the race. I think the cross-chain emergence that we're seeing, and the ability for developers to build on Crypto.com chain or Binance Smart Chain, and for those to be able to be, interoperable assets cross-chain, is something that is happening now. So, this is early. And it's evolving. And again, Max is right. I wouldn't want to predict what happens in 3 years, but that seems to be the path that we're on. And I think more broadly in crypto, we've started to see consolidation. We've started to see cooperation with competition. For this industry to grow, there is quite a lot of interrelation, whether it's between CeFi and DeFi, whether it's between one market participant and another, and that's how the market's going to mature.
Thank you for those responses. I think the really exciting thing about working in this industry is that none of us know what's going to happen, and every day is kind of exciting for that reason. But certainly, I think we've covered some really interesting themes today. How stablecoins will evolve in 2021, how a multi-chain world could evolve, derivatives markets, DeFi versus CeFi. I think there's some kind of interesting themes that are coming out this year. So we have 1 minute left. Is there any other final comments any of the panelists would like to make before we wrap up?
Thank you, everyone.
I just want to mention that most of the developers that I know now, it's funny, but they are all planning to build across at least 3 different chains. Most of the good projects, they are raising money and they are developing only for Ethereum, but at least they plan to have three chains. So you can see it will be a bit more fragmented, I think, this year. But you will see the same project basically like operating across different chains. And they want to get listed after, so on us. Perfect.
That's right. Thanks so much. It's been an incredibly high octane group of panelists today from the best in the industry. So thanks everyone for your time. I know it's incredibly busy and busy time for you all. So thank you, and I think we have run out of time now.
Great, thank you.
Thanks.
Bye.
Thanks, Jay.